Hello students, how are you all? Welcome to our channel Account-Wise Academy. Now I am going to take NCERT 11th Standard Accountancy and I will explain chapter wise. And the explanation will be given in a very simple way with examples so that you can understand it very easily. First, let us take the chapter 1, Introduction to Accounting. In this, we are going to cover meaning of accounting, accounting as a source of information, objectives of accounting, role of accounting, and the basic terms in accounting. So, if you want to look into the important questions, MCQs and fill-ups, you can look into the shorts in our channel Account-Wise Academy. Let us get into the lesson. Traditional accounting focused on record keeping, but today's business demands more. So what did the traditional accountants do? They added when there was an income and they subtracted when there was an expense. Okay. Accountants now provide crucial information for decision making, not just reports. Let us see an example. Your family has planned to go for a vacation and your parents have asked you to act as an accountant. For that, they have assigned you some amount. Let us assume it as rupees 6. As an accountant, what you are going to do? You are going to divide these expenses, like for food this much is going to be spent, for travel this much is going to be spent, and for activities over there, fun activities, this much is going to spend. So you have given crucial information. Okay, and for what that crucial information was given? For the decision making of going for vacation, right? So accountants go beyond bookkeeping to exciting areas like forensic accounting and e-commerce. So nowadays dusty notebooks and other things, bookkeeping, everything is gone. So accounting can be used to solve mysteries like computer crimes, and if you want to design online payment systems, that can be done for ensuring that e-commerce transactions takes place smoothly. So accounting job is also a cool job nowadays. Managers and others rely on accounting data for better decisions, making it an information system. So from planning budgets to making wise choices, accounting information is being used. So this chapter explores the nature, need, scope of accounting as an information system. In the past, accounting focused on tracking money transactions. So we know that we tracked only income and expenses. As the economy developed, the need for clearer decision making information emerged. So when we become more and more developed, we need clearer decision making as the competition increases. Today, accounting identifies, measures and communicates financial data for informed choices. Let us take an example. Suppose if you are a soda manufacturing company and you want to make a decision of going to diet soda, new market. Okay, for that, accounting identifies. It identifies what are the expenses to be spent, measures how much to be spent for making that diet soda, and communicates financial data. After identifying and measuring, they communicate the financial data which you have found to the top management. Okay, it tracks economic events within organizations like sales and expenses, whether the sales has increased or decreased, expenses have decreased or increased, etc. This information helps various users from managers to investors to make sound decisions. So this is the chart which you can find in your textbook also. See, everything is interrelated here. This is related to here, this is related to here, this is related here. So we start with the accounting process and from there communicating accounting information. Whatever the information from the process, we get the communication. From that, we can make the decisions and from that economic activity events like increase in sales or increase in expense or decrease in sales or decrease in expense can be done, and again this leads to what? Accounting process. So everything here is interrelated. So accounting links decision makers with economic activities and with the result of their decisions. That helps in the decision making very easily. Okay. Let us now see the global journey of accounting. So accounting was born in Mesopotamia and Egypt 4000 years ago, where they tracked only taxes and wages, and they have written all those in a clay tablet. China and India, our own country, and China, our neighbor China, we also boast for recording accounting. Okay. And Greece and Rome also used accounting, and they used it for only recording government funds. Pacioli in 1494 in his book Summa, he standardized the double entry system and he used the words debit and credit. He was a pioneer for using the words debit and credit. He mentioned that morality and profit are intertwined. That is true, no? And Pacioli urged for ethical business practices while honoring God. Okay. So from Mesopotamia, our accounting has come to the present day of accounting, where we can see accounting transactions recorded from treasuries to all the businesses, and it has evolved now for reporting of financial statements and for uncovering fraud and for our managing finances. Economic events. So the first point is businesses experience economic events. These events impact finances and involve measurable transactions like buying machinery. What will happen when you buy machinery? Your finances is going to be impacted. Okay, so your finance is going to be decreased. Next is transactions group under events. Accounting identifies groups related transactions based on the specific economic event they represent. What is the specific economic event we have taken? We have taken buying of machinery. So when you buy machinery, what will you do? First you spend money for buying the machinery. Next, you have to transport the machinery from the place where you have bought to the place where you are going to keep it. Okay, so that transportation expense. Second is you have to prepare the place where you are going to install. So that is called as site preparation. That expense is going to be incurred by us. Next, third is the machinery has to be installed. Installation process. That expense should also be incurred. Next, fourth is we are going to make a trial run first before going for the actual run. So that expense also should be incurred, will also be incurred. Okay, so these transactions are all grouped C for specific economic event, that is buying machinery. Okay. Next, external and internal events. What is an external event? If an event involves transactions between an outsider and an organization, they are called as external events. That is, it involves outside parties like buying materials, suppliers. The outside party here is the supplier. Selling products. Outside party, who is the outside party here? Yes, customers. Then internal events. Internal events occur within the company. Okay, like transferring inventory. You are going to stock from stores department to the manufacturing department, or paying wages to your workers. So we will see some examples for this specific economic event. Buying machinery, we saw the process. Selling products, there is some process for that, where events can be grouped. Paying employees, that also involves some process, are all examples of some of the economic events. Identification, measurement, recording and communication. First, let us see what is identification. Not all business events gets recorded. Accounting focuses on identifying financial activities. Only financial activities it identifies, like sales, purchases and salaries, to track the organization's financial health. Imagine you have a piggy bank, okay, and you have some money in it. When you receive money, you will put in it, you will add it. When you take money out, it will be deducted. So your mom is your accountant, okay. Your mom is your accountant and she has a notebook to record all these things. She records only money transactions. Apart from that, she does not do anything. Like if you are going to go out to play, she does not record in her notebook. No. If you eat your food, she is not going to record it. If you are going to watch TV, she is not going to record it. She is going to record only the transactions involving money. Similarly, in the business, they record only financial activities. Okay. Other than that, they do not record anything. Here, company is your piggy bank, your mom is your accountant, and money is your financial activity. Measurement. Accounting uses money to measure things. If an event can be quantified in monetary terms, that is, it can be quantified in monetary terms, converting business transactions into financial terms, it can be done by using some monetary unit. What is a monetary unit we use in India? Rupees and paise. Okay. If an event cannot be quantified in monetary terms, it is not recorded in financial accounts. Okay. For example, if you are going to appoint a new manager or if you are going to enter into a new contract, that it does not involve any monetary transaction. So it will not be recorded. Okay. Not be recorded. Recording. Recording is done in a manner that the necessary financial information is summarized as per well-established practice and is made as and when required. Okay, whatever the law states, it will be recorded in a well-established practice. See, once it has a money value, once you assign something a money value, then it will be written down in a book, accounting book, like tracking your daily expenses in a diary. Okay. This way you have a clear record of everything which has a financial value. Communication. Accounting data gets turned into reports for different people like managers, investors and even you. So accounting data is converted into financial reports which helps managers, investors and even as an outsider to analyze about the company and to get a clear picture of the company. Okay. What does these reports do? They show us how the business is doing financially, helping everyone make good decisions. Okay. The key is getting the right information to the right person at the right time. Imagine you are an investor. So you want to buy some shares of a company. When the accounting data or reports are communicated to you, or when you see the accounting reports, you will be able to get the right information about the company at the right time and can decide whether you can invest in the company or not. That way communication is very important for the accountants to give it to the public. Organization. Organization refers to a business enterprise whether for profit or not for profit motive. So an organization can be any business, big or small, that makes money, that is for profit, or helps others, that is not for profit. Depending upon the size of activities and level of business operation, it can be classified as sole proprietary concern or a partnership firm or a cooperative society or a company or a local authority or a municipal corporation or any other association of persons. So you think of an organization like an umbrella, okay, covering different types of companies, partnerships and even government groups. With this we are going to complete the part 1 of chapter 1 of class 11 accountancy NCERT syllabus. Do like our video and share it with your friends if you find it helpful. Subscribe to our channel, which will encourage us to make more videos like this one. If you would like to enquire about the accountancy classes which I take, or to get more worksheets for problems with solutions, contact us at acct.wiseacademy@gmail.com. Thank you for watching.